This video contains affiliate links, and I earn a referral fee if you use the services mentioned at no extra cost to you, because they're the best in the industry. If you're creating an LLC in 2025, then you absolutely need to know the best tax write-offs that you're eligible for. Understanding the write-offs for new LLC owners can help you maximize your tax savings, which is extremely important early on in getting a business off the ground. So in today's video, I'm going to teach you how to break down these top tax write-offs for new LLC owners in 2025 so you know how to take advantage of them. Let's get started. First, startup costs. Let's face it, for most of us, it takes money to make money. This means that there is a very good chance that you will have some money to spend early on in setting up your business. This is true whether you're just opening up a barbershop, a car dealership, or a law firm. It doesn't matter. It's hard to get a business up and running without an initial investment. The good news is that in 2025, the IRS still allows you to write off certain startup costs. Startup costs are the expenses you incur while setting up the business. This can include business plan development, market research, creating a website, surveys. You can deduct $5,000 in startup costs during your business's first year. However, any expenses that go beyond the $5,000 limit must be spread out over 15 years. So if your total startup and organizational costs are under $5,000, you'll deduct the full amount right away. However, if your costs exceed $5,000, it will take a little bit longer to write off the full amount. 2. Home office expenses. If you run an LLC from your home and have a space that you use regularly and exclusively for business, then you can qualify for a home office deduction. This deduction allows you to take a portion of the expenses related to your home since it serves as the principal location where you operate your business. However, there are rules for claiming the home office deduction. For example, you can't claim it if the space is not your principal place of business. So if you own a restaurant and have an office there but occasionally work out of your spare bedroom, you won't be able to claim the home office deduction. If you do qualify, here are some expenses that you might be able to deduct. Rent, a percentage of your mortgage interest, homeowner's insurance, HOA expenses, utilities, and property taxes. There are two methods you can use to claim the home office deduction. The simplified method. In 2025, you can deduct $5 per square foot up to 300 square feet. This gives you a total maximum deduction of about $1,500. The actual expense method. This method allows you to deduct the percentage of your qualifying home expenses related to your home office space. To calculate your home office deduction using the actual expense method, divide the square footage of your home office by the total square footage of your house. Once you have this percentage, you can deduct the same percentage of all eligible home office expenses. For example, if your home office makes up 10% of your home's overall square footage, you can deduct 10% of qualifying expenses. If you have $30,000 in home expenses, you would take a $3,000 deduction on your returns. As you can see, the actual expense method can lead to a larger home office deduction. For this reason, many people calculate both methods and choose the one that provides the largest deduction. Before we move on, I need to talk to you about Bizzy. When it comes to setting up an LLC, Bizzy is the absolute most helpful resource out there. All you have to do is go to bizzy.com, select your entity type and state, and the service will walk you through the process of setting up your limited liability company. Bizzy can also help you set up and register other business entities. So if you want to start an S Corp, C Corp, or even a nonprofit, you can do so on their platform. They also offer services like setting up a virtual address, getting your EIN number, obtaining business licenses and permits, and registering trademarks. Bizzy is a 100% bootstrap company, meaning it operates without private equity or aggressive growth metrics. Their mission has always been simple: to do right by their clients by providing exceptional services at fair and honest prices. Their success over the past 20 years speaks for itself. If you want to learn more about what Bizzy can do for you, click the link in the description below to save money on setting up your first LLC. Now, back to the video. 3. Employee and contractor wages. Will you be hiring employees or contractors for your business? If so, then you'll be able to deduct the wages or fees you pay them. As long as employees or contractors you hire do actual work for your business, The IRS considers these wages to be valid business expenses under Code Section 162A. The IRS allows business owners to deduct expenses that are necessary, ordinary, and reasonable in the pursuit of income. Many new business owners don't fully understand the tax side of running a business, and they don't realize that they can get a write-off for wages paid to employees or contractors. If you were in that camp, now you know. 4. Vehicle expenses. If you use your vehicle for business purposes, you can take advantage of vehicle-related deductions. However, if you use the vehicle for both personal and business purposes, you can only deduct the percentage of business use. When claiming vehicle expenses, you have two options. The standard mileage method. In 2025, you can deduct 70 cents per mile driven for business. So if you drive 10,000 business miles, that's a $7,000 deduction using this method. The actual expense method. This involves calculating total vehicle expenses like fuel, insurance, maintenance, repairs, and depreciation. You then apply the percentage of business use and take a tax deduction. You can even use Code Section 179 to claim a larger amount of depreciation, depending on your vehicle size. 5. Fees for professional services. Throughout the course of running your business, you'll likely spend money on professional services. This could include hiring a lawyer for legal issues or a sales consultant to analyze your strategy. LLCs pay for a wide variety of professional services, and these fees are generally deductible. So don't forget to write them off when filing your taxes. 6. Marketing and advertising. Most businesses pay to advertise their goods and services. Common marketing expenses that are deductible include Facebook, Google, YouTube ads, SEO services, social media influencer partnerships, radio, TV, and newspaper ads, flyers, and direct mail. Any marketing costs you incur can be fully deducted in the year they are incurred. Next 7. Office space rent. Not everyone operates from a home office. If you rent an office space outside of your home, you can deduct 100% of your rent for commercial office space. This can be a major tax deduction, so don't overlook it. That was it for today. I hope this video helped you understand the basics of tax write-offs for new LLC owners. They're a team of experts who will handle all the heavy lifting of starting your business, taking only a few minutes of your time. So, if you want to learn more about LLCs and how to set one up, then welcome. You're in the right place. If you decide to try Busy, you'll find an affiliate link in the description. If you found this helpful, go ahead and subscribe. I look forward to seeing you in the next video.